but we're going to get her done. 2 different full-length shows today for your viewing pleasure. And as we continue here, I just want to say, as you know, this will be my last day for the year. I'll be back with you next year, but this will be my last day for the year. So I just want to say thanks to everybody at FX Street and all the great people there in Barcelona who make this possible. Thank you for giving me a platform to speak about things that I love, like Forex trading and charts and all that wonderful stuff. So it's a season of gratitude, and I certainly am feeling the gratitude today. All right, let's get started. I'm going to start off with dollar yen. This is a trade that we are in. Remove all the indicators here so you can get a better look. There you see it on the daily chart. Okay, and the green line is the entry. The black line is resistance, and the red line is the stop. And as you can see, we've hit the green line pretty much every day since we put this setup in, which was about a week ago today, I think, approximately a week ago. And we're certainly in the trade. We've been in the trade, and nothing has really happened yet. And I guess we shouldn't be too surprised, because here we are in a low volume environment, right? The week between Christmas and Hanukkah and New Year's Day, and all this is going on at once. And for a lot of Forex traders, trading is not always on their mind every day of the year, especially right now. But we're in, I'm happy to say, and we are breaking even at the moment. We're in at 109.53. That's the green line. The current price is 109.53. The stop has not been hit. The stop is 109.77. And one of the things I think you can see from looking at this chart is that we have correctly identified an area of resistance. We have correctly identified an area where the price just cannot seem to get through, just cannot seem to break through resistance. Resistance is 109.65. So, because it's tricky. There's an art to it. But I think one of the reasons why we took this trade is because the levels are so clearly defined. I think you'll see that if you look at the upper black line, 109.65, you see a lot of wicks. I'm going to zoom for your viewing pleasure. We'll zoom in. Let's try that again. There you go. So we're all zoomed in. You can really see the wicks when you take that closer look. Whenever I see a lot of wicks in the same area, that's telling me something, right? The market's trying to tell me that there's a seller there, because this means that on numerous occasions, the price has come up to 109.65, sometimes slightly higher, occasionally slightly lower. But every time it comes up into that vicinity, the same happens. It's almost as if somebody was standing up there with a hammer, waiting for the price to come up so they could knock it back down. So when I see something like that and I identify something like that, I want to use it. I mean, why wouldn't I? The whole game is basically identifying buyers and sellers. And when we say that the price, there's a lot of wicks in that area, I think that's one way. There are many ways, but that's one way to identify sellers. And buyers too, because if you look at the lower black line, 108.45, you also see an area of wicks where the price just cannot seem to penetrate on the downside. All right, so we cannot seem to penetrate on the upside. We cannot seem to penetrate on the downside. And anyway, that's a very interesting range. And when you look at this chart too, I mean, look how long we've been in this range. All of December and really a good part of November. I would say at least 6 weeks we've been bouncing around in these areas. And that shows me something also. Like, look, there might be a hedge fund selling at 109.65, and it might be a very large sell order. Now, the Forex market is vast, but it can be moved if the orders are big enough. In fact, that's exactly what is moving the market. When you see the market moving, it's orders, it's buying and selling. That's what moves everything. So, can institutions move the market? Yes. Yes, they can. Because if they couldn't move the market would never move. If the biggest traders in the market couldn't move it, then it wouldn't move, right? It's not just gravity that makes prices go up and down, gravity or the lack thereof. It's always buying and selling that moves the price. And it doesn't matter what you're trading. Could be stocks, bonds, futures, gold, oil, or it could be currencies. So it looks like somebody is selling the heck out of this thing, and they have been for over a month every time it comes up to this level. We haven't been down to support in a while. That's 109, 108.45, 108.45. We haven't been down there in a while. But when we last left that area, it seemed to be bouncing out of there for a good month from mid-November until mid-December. There were many, many candles that came down to 108.45, and it created bounces every time. There's a buyer down there. Somebody's buying down there. Or let's put it this way, either there's a large order that needs to be filled down there, or somebody perceives it as cheap at 108.45. Somebody perceives it as expensive at 109.65. And also, they don't necessarily have to be two different entities. It could be one entity. It is entirely possible that Goldman Sachs or JP Morgan perceive dollar yen to be cheap at 108.45 and also perceive it to be expensive at 109.65. And let's face it, if you could buy it at 108.45 and sell it 120 pips higher, and you could do it over and over again, would you do that? I think the answer is yes. So another way to look at it could be that whoever is loading up down here at 108.45 might be taking profit at 109.65, 120 pips higher. It's entirely possible. So try to have an open mind whenever you look at these charts. Okay, it's not as if there was only one way that prices can move. And yeah, economic events cause the price to move. You're going to say, Ed, but GDP, that's what moves the market. No, GDP does not move the market. Institutions reacting to GDP is what moves the market. Buying and selling is what moves the market, always and forever. In every market, it's buying and selling that determines price. Therefore, price is the ultimate indicator. And that's why you don't really see any indicators on my chart, because the price is indicating everything. And the indicators are merely derivatives of price. And we're not really interested in the derivatives of price. We're just simply interested in price. That is all. Price is everything. So anyway, we're in the trade. You can see my first target is at 109.05. My second target is at 108.57. And at the rate things are moving, quite frankly, it could be a very long time until we get there. Now, one thing I might do is on December 31st, I might close this trade and then reopen it on January 1st. Why would I do such a thing? Well, simply for tax reasons, I might do that. Just to keep the accounting nice and neat. So I don't know about you. I'm probably going to be at a party on New Year's Eve, but if I were not at a party on New Year's Eve, even if I am at a party, I can always pull out my phone and do this on an app. At 11:59 p.m., I can close the trade, and at 12:01, 2 minutes later, which is the next year, I could reopen it. And then, for tax purposes, it moves the trade completely into the next year, into 2020. You know, it's not necessary that you do that, but sometimes it makes the accounting a little bit easier. And of course, people always ask me questions like, Ed, do I have to pay taxes on my Forex gains? Yeah, you have to pay taxes. Everybody has to pay taxes, okay? I don't know why people ask me that, but I seem to get that a lot. I don't know why I get that question, but there it is. I do get it. So, just in case you're wondering, the answer is yes, you must pay your taxes. In fact, one of the things that I'm big on, I have a goal. Maybe your goal for 2020, right? How's this for a New Year's resolution? Maybe your goal for 2020 should be to pay $1 million in tax, or €1 million, or £1 million. I don't know where you're located. Could be $1 million Canadian, or a million Singapore dollars, depending on where you live. But maybe that's my New Year's resolution. I want to pay $1 million in tax in 2020. How cool would that be, right? And you're saying, well, Ed, that's too ambitious of a goal. Well, you know what? Aim for the stars. You might just land on the moon, right? Yeah, even if you aim for the stars, and even if you come up short, you might just land on the moon. Something to think about. Okay. And we are up 1 pip on this boring little trade, so I'm about to move on. We'll move on to New Zealand dollar next. So really, we're talking about philosophy of trading in addition to giving you trade setups. And by the way, if you missed, we put this trade in last week, but and we're in, and it's right at the entry point, and nothing has happened. So really, it's still legit. There's nothing wrong. Resistance has not been broken. So my reason for getting in the trade is still valid, and therefore I am sticking with it. In addition to that, if you didn't get in until now, well, guess what? Now's your chance to get in at the entry price. And like I said, the setup is still valid. Just be aware of one thing. Nothing that I say on here is investment advice or trading advice per se. This is simply me giving you my opinion for your amusement and education purposes. Okay, so when we press the button, we are the ones who take responsibility. When I press the button on my account, I'm taking responsibility. When you press the button on your account, you are taking responsibility. And that's the way it always shall be. Okay, I said we were going to move on to New Zealand, so why don't we do that next? NZDUSD. So our dollar yen setup is still legit. So is this one, and this one's frustrating because you can see where I placed the entry in green, but it just didn't get there. And, but let's follow along, because every day your entry should be different on this trade. For example, when we did this setup, I believe I was with you on this date, right? It looks like a week ago. Let's put the 10-period exponential moving average up on the chart, because you can see that we're very clearly in a trend, correct? I mean, there's really no question or debate that the price is moving higher in a very steady fashion, and that is the definition of a trend, correct? So let's go. And as you look at this, you can see that Recently, there have been no entries. I can see there are several entries. Now, it's a little bit deceptive. First of all, you can definitely see how the price remains on one side of the moving average, right? Get rid of these lines. Now, this candle, way back on December 11, is the first hit on the moving average. There's no way you would have taken the trade at that point because there's no way that you can predict that the price was going to bounce. But once you've seen the price bounce and once you have 10 candles, 1, 2, 3, 4, 5, 6, 7, 8. December 11th was the 8th candle. 9, 10. Now it's go time. You've had 10 candles close on one side of the moving average, and you have evidence of a bounce on December 11. Your course of action is now clear. You're supposed to buy. You're supposed to go long the next time it hits the moving average. And that's going to happen here on December 17th. In fact, you get 3 consecutive days, just in case if you miss it, the 17th, the 18th, and the 19th of December. All 3 of those days, it looks like the price hits that moving average and does give you an opportunity to get in. So, and if you're in there, it's a beautiful trade. It's a beautiful trade because the price has, we never know when this is going to happen, okay? We never know which ones are going to pan out and which ones are not, but we just keep taking our shots. You got to shoot your shot, right? Because you you miss 100% of the shots you don't take. That's Wayne Gretzky said that, right? You miss 100% of the shots you don't take. So you got to shoot your shot. Okay, so 17, 18, and 19. Right? All those were great opportunities to buy. The most recent one on the 19th, we hit the moving average at 65.77, and the current price is 67.03. So that's a 130 pip profit and counting, and counting. But what about today? What if you're not in this trade? Well, you got to buy it on the moving average. So where is the moving average? Today, that's easy. Today it is at 66.33. Here's the tricky part, gang. Look at that green candle. Look at the current price. It's 70 pips above your entry. Also, that moving average is created from the 10 most recent candles, including the current candle. What can we infer from this information? If the price comes down to the moving average, it will depress the moving average. If you enter blindly at 6632, if you place an entry order there and leave it there and forget about it, you are going to enter above the moving average. Now, I don't know exactly where that moving average is going to be if the price touches it today, but I know this. In order for the price to touch that moving average, that green candle has to turn into a red candle if it's going to happen today. That means the price has to drop 70 pips. And if that price happens, if that price drops by 70 pips, don't you think that the moving average is going to drop? I do. The moving average will fall. So we cannot simply place the order there and leave it. In fact, since we know that the price cannot drop that far without depressing the moving average, we will move the entry below the moving average. Now, it's impossible to try to guess exactly how low we should go. But here's how I like to do it. I like to start out 5 pips under the moving average. So we're currently at 32. Let's pull that down to 27. 6627. I'm not saying that's the correct number, but it's a start. And here's the way it works. If that price starts dropping down, you'll see the moving average falling. And after a while, it'll become apparent that either you put your entry in the right place or you didn't. The closer the price gets to the moving average, the more you have to adjust because you want to enter right on the moving average. Maybe the moving average is even lower than my current entry, but at least, and that means I will have to adjust. Right now, we're 70 pips away from the entry. If an hour from now we were 30 pips away from the entry, that moving average would be lower, and I would have to adjust again and just keep adjusting. The entry is the hardest part. Everything else is easy on this trade. The entry is the hard part. What about the stop? The stop is based on the ATR, and you can see the ATR is 41. The red number at the bottom right of the chart, 0.0041. That's telling me that Kiwi, New Zealand dollar, moves 41 a day, 41 pips per day. And I take that number, I cut it in half, I get 20.5 pips, rounded up to 21. My stop is 21 pips below my entry. So if my entry is 27, my entry is 6627. It's 27 minus 21. My stop is 6606. Now, if that was too much too soon, I'll do it again. I know I went through that quickly. Here's how we determine the stop. The stop is equal to half of the ATR. The entry is the moving average, or where we anticipate the moving average will be. The stop is half of the ATR. So if the ATR is 41, half of 41 is 20.5. We got to round that 20.5 up to 21. Subtract 21 from the entry and you have your stop. So if the entry is 6627, say take 6627 minus 21 pips gives you 6606, and boom, you have your stop. Now remember I said earlier I may have to readjust that entry again. I will, let's suppose I have to move that entry 5 pips lower again. As long as I'm not in the trade yet, I'll move the entry and the stop both down the same number of pips to try to get that accurate entry. I'll move them down by the same amount. Okay? Pretty neat? I hope so. I really enjoyed this session. This is it went by pretty quick. We reviewed our current trade, dollar yen, and then we created an entry for New Zealand US dollar. And hopefully along the way, right, we achieved a little understanding. Adam says, I see. Good. That's good. So here's what's going to happen, gang. We got started late due to a technical issue. The next session begins in 15 minutes. So I'm going to stop this one right now. And in 15 minutes, we'll pick it up. This has been Ed Ponsi on behalf of FX Street saying thank you for listening. I'll see you back here in 15 minutes. Be sure to check your email for the correct link to get into the next session. And thank you so much for listening.